Last week was very heavy with a lot of news on the street, trying to wrap your head around some of those headlines. The earnings by UBA, PZ and Guinness were largely trumped by the noise around the news of the central bank action against four banks and MTN, which is Nigeria's telecom and Africa's largest telecom companies. Let's return to the stock exchange for a bit of this conversation. Temple Asaju, business correspondent, was tracking some of this throughout the week, in particular those earnings and what make the headline is. Temple, it's nice to have you back on the conversation. You agree that MTN saga trumped the earnings last week?
Yeah, I do. It did in a way. That's for Stanbic IBTC and for Diamond Bank. Diamond Bank, before that earning or before these reports came in, had been down some 16% and trading below its year high until the reports came in that it then has to return or refund about 0.25 billion naira to the coffers of the federal government, of course represented here by the CBN. But before then, again, we had seen a bit of trajectory on that company. The last two trading sessions before this news came in was driving Diamond Bank shares up. I recall it ended at 1 naira 35 kobo as against 1 naira 10 to 15 kobo thereabouts before this news came in. Remember as well that for Stanbic IBTC, we saw the release of a 1 naira interim dividend the week before the week that we had this worrisome news on these two companies. Now, Stanbic IBTC before then was trading at about 50 naira per share, and that was the highest among the banking names that you have listed and tradable on the Nigerian Stock Exchange. But since this news hit these two stocks now, of course, you know there are four banks, but these two are the listed ones in the market. We've seen their share prices declining. Over 3 billion naira was lost on Stanbic IBTC last week. But for Diamond Bank, I've not been able to do that analysis nor put a figure to it. But we know that as at the end of the week, it actually went down because investors began to react to it the day after. Now, Bolson, you also talked about UBA earnings and the two other earnings that actually came in during the course of the trading week. UBA from the banking sector, it came in. It was one of the companies whose earnings had been expected, long expected in the market. Access Bank also came in the A part of the week, but UBA came in midweek. But then the reaction that we got from traders wasn't so positive. It was it came with mixed feelings to the market, and that is as a result of the impairment charges that rose in the earnings. We also saw a bit of spikes in the tax rates, and that impacted the non-interest income as well as the net interest income of UBA. Yes, we know that there was a bit of growth in the interest income by 15.5%, and that's as a result of the rise that we've seen in investment securities on the part of the company. But if you look at the kind of effect that this impairment charges had on the stock of the firm, impairment charges was in at 5.3 billion naira as against 1.5 billion naira that we saw in the preceding year. This resulted from the stricter impairment assessment criteria that we had for the IFRS 9 that a lot of the banks are now beginning to cope with in the system. We also had a non-performing loans ratio that rose by 50 basis points quarter on quarter to 7.2%. And this also was as a result of the two mid-sized classification of loans that was seen in that period. Then this surprising impairment, if you compare to what we had from GT Bank and Zenith Bank, it was not expected at all. It was the major thing that surprised investors, despite the 20 kobo dividend that was proposed by the board of UBA. However, with what we have right now, it offers good entry points for some investors? I mean, for speculative investors who are looking to make entry for a short period of time.
Temple,
yeah.
if I may cut in there, if you look at these impairment charges is a lot. If your non-performing loan ratio goes up and your impairment charges also go up, which means that you reclassify some loans, they become more problematic in view of your risk or your analysis, then the ratio goes up. Then there's also impairment charges, which you rightly spoke about there. If the impairment charges on bad loans or whatever begin to rise, 5 billion naira is a whole bunch of money. If you pile it in the studios, I'm sure it would almost be filled up.
I agree.
If you put the cash, put 5 billion naira in this studio. Even in the studios where you are, the stock exchange, I'm not sure, you'll be able to put 5 billion naira in that studios there. It's small. So that's a lot of money for a bank to have 5 billion strike off his book, because those are charges you're paying because you're carrying bad loans.
Yeah. But of course, this means that the company really has a bit of upside. If you look at other parts of the book, you've seen 18.9% increase in PBT. Yes, this ended up impacting on the PAT, that's the profit after tax, because it was supported by 103.9% surge in terms of the net trading that was recorded. PAT, remember, was just 20 billion naira, representing 15.5% decline in terms of quarter on quarter. But what the traders that I've related with on this particular stock are telling me is that you have a good entry point right now as a speculator. If it's something that you want to quickly buy into ahead of the 2019 general election, it's good to go. Then if you also consider the 20 kobo dividend, if you have large volume, you could quickly make entry. The safe period time is within the first and second week of September. So these are good entry points. This is a good entry point to an extent.
Temple, we have just about 2 minutes left. Let's quickly talk about the insurance sector. With so much, looks like some noise is coming with the news of the new deadline for reclassification and recapitalization.
So that's true. Recall that on Saturday, I had this chat with Mr. Barineka Thompson, who is one of the directors for supervision, specifically at the National Insurance Commission. I had asked him a little bit about how this recapitalization and reclassification exercise will impact the insurance stocks that are now listed on the stock exchange. Of course, half of the insurance companies that we have in Nigeria are all listed in this market. So he's talked about the fact that this will help them to come up with better products. This will create a bit of more liquidity for some of them that are here. You know that most of the insurance companies listed here and tradable here all penny stocks. They're less than 5 naira in value. But, you know, given this exercise that we're seeing right now, take NEM Insurance, for example, after the 9% stake that was indicated by Eaton, the international private equity firm in that company, we've seen it rising to 3 naira 30 kobo. And so if it goes on like this, we're probably going to see a bit more liquidity on all of these insurance stocks.
Temple, let's hang it there for today. Thank you very much for weighing in on some of the top stories, headlines from the final week in August. As to say goodbye.